Hey guys, what's going on? So, with Christmas fast approaching, I've been thinking a lot about applying for the Amazon Prime Visa credit card. And the reason being, I already pay for the Prime membership, so it really would just be giving me 5% off everything on the site. And with the current situation, I'll most likely be buying a lot of my gifts anyways, so the online discount would probably be useful. If I do decide to get the Amazon credit card, this would be my third credit card. Yes, my third. And some people that may sound irresponsible or maybe even crazy, but I disagree. I'm still 18, turning 19 in a couple weeks, but I understand the power of credit cards and the value that multiple credit cards can provide you. I know some people who don't think credit cards are a good idea. So in this video, I'm going to try to explain why I think you should have a credit card or even multiple cards, and why I think 18-year-olds are missing out by not applying for credit cards as soon as they can. First of all, I just want to start by saying 3 years ago, I had no idea how credit cards work. I originally thought that for every purchase you made, you would have to pay interest on top of it. But I was lucky enough to have an older brother who would turn 18 before me, and he actually showed me how it's really just a better version of a debit card. This is because if you know how to use it properly, you're not going to be spending any more money than you would with a debit card. And instead, you'll slowly start developing a strong credit score, which will be very important when you have to start applying for loans and whatnot. So how do credit cards work exactly? Well, basically it's the exact same as your debit card, except you can earn rewards on top of it. So as you make purchases on the card, the balance on your credit card increases, and you simply just have to pay off that balance every month or as often as your bank requires you to. It's that simple. However, you do run the risk of being charged interest if you forget to pay off that balance, which is what many people are afraid of happening. But the reality is, as long as you are only buying things that you can afford, you should never be worried of missing a payment. Honestly, the fear of missing a payment could even be a good thing, because it encourages the habit of daily banking. This will give you an idea of what your balances look like on a consistent basis, which will also decrease the likelihood of you purchasing something that you can't afford. So now you may be wondering, well, if it's exactly the same as a debit card, why even run the risk of collecting interest? And the first reason is cashback. Cashback is the most common reward that basic credit cards offer to clients, and it's basically just a small percent of money you get back on certain purchases. The actual amount varies depending on your bank. So, for example, I have a credit card with TD and Tangerine. They both offer cash back, but in different amounts and for different categories. My TD cashback Visa was my first ever credit card, and I got it as soon as I turned 18. It has no annual fee and offers 1% cash back on grocery and gas purchases, as well as 0.5% back on everything else. Tangerine, on the other hand, has a much more pleasing offer, with 2% cashback on 3 categories that you choose yourself and 1% cashback on everything else. So obviously Tangerine was the better offer because it has better rewards and no annual fee as well. In fact, this card was the main reason why I originally switched to Tangerine. 1 to 2% may not sound like a lot, however, when you consider the fact that you'd be spending this money anyways, this 1 to 2% will slowly start adding up, and at the end of the day, it's just a free discount off your purchases, so why not take advantage of it? Anyways, these cashback rewards are also redeemed in different ways. So at TD, my rewards were locked away until I accumulated at least $15, and at that point I would be able to use it to pay off my future credit card bills. At Tangerine, however, I have complete freedom to do whatever I want with it right away. So I decided to set it up so that it would send all my rewards into a Christmas savings account to slowly start adding to the money that I would set aside for gifts. The next benefit of applying for a credit card is getting a good credit score early. If you're 18 or your early 20s, odds are you don't really have that many monthly bills. Why does that matter? Well, this means you don't have to worry as much about your money, which allows you to get into the habit of paying off your credit card down now while that bill is still low. The worst thing you can do for yourself is to let all these financial responsibilities hit you in the face all at once. The risk of missing a payment when you're, say, 27, living away from home, is much higher than missing one right now when your biggest worry may be paying off a monthly phone bill. Not only will the bill most likely be higher, therefore making the interest charged a lot more, but your credit score will take a hit and you're already at the age where that can have a big impact on you. At 18 or 19, yes, missing a credit payment is still a bad thing, but time is on your side to fix that credit score before you really need it. A missed payment can stay on your credit report for up to 7 years. Think about how long that is. But at the same time, the 18-year-old who missed a payment will have hopefully learned their lesson and had that payment removed from their report before they turn 27, while that 27-year-old will have that on the report till they turn 34. I personally have never missed a payment, but according to borrowwell.com, your missed payment can drop your score up to 90 to 110 points, which, if you are unfamiliar with credit scores and how they work, this is a massive amount. So basically the idea is, if you're gonna make any mistakes, you wanna do it now while time is still on your side, so that you can reverse the negative impacts before it really matters. Another benefit is the fact that your credit score increases based on how long you've had a credit card for. So by opening an account at 18 years old, you immediately start that clock, and as you grow older, it will only benefit your score. This one is by far the easiest way to set pace for a strong credit score early, because once you have opened that card, your work is done. As long as you don't close it, the time will continue to increase and you will receive the benefits for doing so. The last benefit that I'll talk about in this video is that applying for your first credit card early means that the time you have to wait before applying for your second credit card starts right away. This means you could have maybe 3 to 5 sources of credit when you enter your early 20s. Having multiple credit cards is a good thing for many reasons. The most relevant reason for young adults is your credit utilization rate. This is one of many factors that impacts your credit score, and it is benefited from multiple credit cards. For example, say 2 people spend exactly the same amount of money every month, say $300. Let's just say all $300 is on the credit card and they both pay it off on time. But let's just say one person, Bob, only has one credit card with a limit of $1,000, while the other, John, has 2 credit cards with a total limit of $2,000. Well, in this case, John's score should be higher because he has a lower credit utilization rate of 15% versus Bob's rate of 30%. Simply owning that extra credit card can lower your rate, and all you have to do is apply for the second card. Owning multiple credit cards does not make you irresponsible, as long as you continue to only make purchases that you can afford. That being said, not everyone is going to want multiple credit cards, especially if they have annual fees to worry about. So, if you're one of these people, all you have to do is simply spend less on the credit card and spend more on your debit card as you are anyways. This keeps your credit utilization low while still spending the same amount of money as before without needing the second credit card, and you're still benefiting your credit score. These are only some of the benefits that credit cards can offer you. I decided to only cover the ones that are most relevant to myself right now, because the point of this video is to encourage people that are around my age to apply for that first credit card as early as they can. There are so many rewards that you can get in the future with better credit cards, like travel points or maybe even better cash back. And there's even a concept called credit card churning, which basically just abuses sign-up bonuses. I think that not applying for your first card could be compared to just not taking your G1 test just because you don't think you're gonna need to drive anytime soon. Fact of the matter is, you will need a credit card eventually. And even if you're a little worried about using one, getting it early only benefits you in the long run. That being said, if you don't trust yourself to pay off a credit card every month, maybe don't jump in all at once. But at the end of the day, your credit score is still very important. And like I said earlier, worst case scenario, hopefully you'll learn from your mistakes early when the impact won't be as large. With that being said, if you made it this far, thanks for watching. Leave a like on your way out and subscribe for more.